Good afternoon, everyone, and welcome to Stock Market Today. It's Coram here, and what a wild day to kick off the week. More tariff headlines, so more punches that us investors have to roll with. And here to break everything down with me is my colleague, Ed Carson. Ed, great to see you.
Great to see you. I want to take a look at three stocks: Sprouts, TJX, and C.
All right. And a little earnings action to check in on after the close as well. So we'll get to that before we wrap. But first, let's take a look at the major indexes and we'll kick things off with a look at the NASDAQ composite. The NASDAQ today closing down 1.2%. But as you can see, well off lows for the day. Meanwhile, the S&P 500 was down about 0.75% here, closing right around that 6,000 level, just shy of it, and right around that 50-day line. Meanwhile, the Dow down 0.3% off day. You can see definitely coming well off the lows here. And then the Russell 2000 had a tough day as well, percentage wise, but did close off the lows down 1.2% like the NASDAQ. So, Ed, what do you make of this choppy market here? I was saying on Friday and this morning that my theme for the market right now is expect the unexpected.
Yeah, and just maybe years of this that's to come. I mean, and if you put the context from the top of Friday's high, when we got the news that the White House said, yeah, we're going to get Trump tariffs, and then that low, it's a pretty sharp drop from there to the lows. Now, then the news came out that Trump is going to at least provide a 1-month suspension on Mexico tariffs. It looks like the tariffs on Canada and China are going to go through, though. Maybe there's hopes that that could also be suspended, at least the Canada ones, but nothing's happened there. Yeah, it makes it really difficult because it's not just choppy where things will go up and down, but you could have a headline that instantly or almost instantly sends the
Yeah.
index up or down 1 or 2 percentage points. That just makes it difficult to trade. You take a new position, then you don't know it's going to turn around. It's like, oh, it'll go back the other way. You don't know how that's going to go. So it's one thing if you have a longer term hold was to go through this, but it looks like, again, we were just about to get out of the chop, and the S&P actually did get to a new high very briefly a few days ago, but
Right.
it's we're just not out of that yet, and it just makes it difficult, very challenging. If you're going into things, you have to be really ready to step out.
Mhm. Yeah, it's a great point. I think the other thing to keep in mind is making incremental decisions, right? Versus all or nothing. If you were following risk management rules by trimming in the first, opening, I don't know, 30 minutes or so before that headline came out, oh, the Mexico tariffs are on hold, you know, like you said, it makes things tricky, but incrementally, and hey, let's see where we close the day, not just doing nothing and being a deer in the headlights, but those incremental decisions. But there's definitely a lot of landmines out there, no doubt.
Absolutely.
Okay, let's also take a look at the action in the 10-year treasury yield here, Ed. What do you make of the action?
Yeah, I mean, we did ultimately drop. It came well off the lows. We found support at the 50-day line. Again, this is all headline news as well. I mean, coming here. So, it was one thing. And one other thing to look at, maybe it'd be UUP or some dollar index, because tariffs are going to push up the US dollar. And, there's some weird things with this chart, but you can see how this in this daily thing, how we've been moving up. And so that's something else that was pressuring stocks. It's not just the tariffs, but part of the tariffs is that you'll see a stronger dollar, which can have some negative impact for stocks and for exporters.
Right. And then also, this tariff discussion, I suppose, can be tied to the Fed's potential plans on interest rates, right? If we're thinking about how does this fit into that inflation picture?
Yeah, that's one reason why the Fed's talked about the uncertainty, because we just don't know. It's not just that there are these policies, but will they go into effect or not? I mean, it makes it very difficult for the Fed to make decisions. Tariffs might slow the economy, but also boost inflation. It may just be a one-off price increase, which is something else the Fed has to consider. So it just makes it difficult. And the Fed was already sort of thinking maybe we want to pause anyway, and
Right.
so that just makes them want to just sort of sit and wait to see what happens.
Okay. Let's also, before we move on, check out the breadth picture, participation wise. Here's a look at RSP, the S&P 500 itself. Again, down 0.75% today. RSP down a little less than that, 0.6% here, but a very sharp intraday drop. And then QQQ, this represents the NASDAQ 100, down about 0.8% for the day. QQEW, which reduces that weighting in those mega cap techs, down just 0.25% today. Ed, what are your
Yeah,
thoughts?
there's a few losers. I'm not sure all the reasons why. Apple, I can sort of see why, but Nvidia was down, Tesla was down. So some of those big giants, they were just down, and that's for whatever reason. They came off lows, but that weighed on it. So the breadth wasn't as bad beyond some of those big names, but there were some big losses, especially to start the day.
Yeah, a lot of volatility to navigate there. Okay, well, let's take a look at some notable stocks out there. Sprouts Farmers Market. Ed, I feel like almost every time I look at this chart, I wonder, why have I not owned it? I feel like it presented a reasonable entry point for early, maybe more aggressive investors on January 21st when it retook that 50-day line. And it is now currently in a buy zone once again.
I'm right there with you, and I shop at Sprouts every week, so it's not like I'm not reminded of that.
Yeah,
This
you actually
company,
have the conviction there.
yeah, I do. So, but I think it's always, I mean, maybe every time I'm thinking, boy, there's something else that looks more exciting. But the fact is, this has had a tremendous run, and it would be, if you got in and you got in and let it go a little bit, it would be easy to hold from that point because
Mm,
it keeps on finding support. Yeah, it's acting well. Obviously, if there were tariffs, that would push up their costs. But I think the thinking is that they would be able to pass it on. That they would, one way or another, that must be the thinking going on. I don't know if they would or not, but that's what the market is. If you look at Kroger, which is another pure play grocer, not as that one also had a strong day. So it's just showing that there seemed confidence that would do well, regardless of how this shakes out on tariffs.
yeah, and it seems like Sprouts wasn't alone. You have bigger names like Costco up on the day, also Walmart reversing higher. So that's something to think about as well here.
Yeah, absolutely.
Okay. Well, there's a look at Sprouts Farmers Market, a number of up days in a row here, and currently trading about 11% above the 50-day line and also 11% above the 10 weeks. Sometimes those numbers differ, but not in this case. So a stock that continues to outperform here. Elsewhere in retail, TJX, but this time the retail apparel area, we are seeing a setup for TJX. Taking a closer look at the daily chart here, down fractionally on the day and off lows, holding above the 50-day line, Ed.
Yeah, so you pointed out a couple other discounters. There was another one. They're doing well. If you feel like this could, the tariffs might be shaky, this seems like a safe area. I mean, they probably be able to weather things. They take out other people's closeouts and put them in. So, the pricing would probably be pretty strong if there were tariffs for them. So they'd probably be in good shape. And in any case, it feels like they would probably do fine as much of anything else. And so this one's been holding in. Maybe you can pull back and sort of form a handle. I know this is a flat base, but still find some kind of little pause here. This is just an area that's doing pretty well. The whole discount space and a lot of retail, as you say.
Right. And in terms of price performance versus the S&P 500 here, Ed, I guess it depends on what time frame you're looking at, right?
Yeah,
Because it has outperformed the S&P since about last May. But then if you look even shorter term, over the last couple of months, maybe just keeping pace with the S&P. And then going back to January of 2023, it does look like it has more or less over that longer time period here, more than 18 months, 2 years here, um, kept pace with the S&P 500. So in terms of, in a volatile market environment, just thinking about portfolio management, right? And where you want exposure, how do you think about that?
yeah, that's a really good point. It has just gone sideways lately. It's been less volatile than the S&P 500. It feels like, but in general, if you have a stock that's gone in line, you might think, well, why not just go for the S&P 500? Maybe this is ready for another run. It's not one that's probably going to have this amazing thing, but it does go on decent runs, even though sometimes the fundamentals don't look like jaw dropping, but they just have solid performance over time. But yeah, that is something to look at. It'd be great if it broke out or cleared this area and really made a move. Probably would want to get it pretty close to the 50-day line because it does seem to come back to that. And if it doesn't outperform, then it's more likely to revert to that too.
Totally agree with all those points said. Okay, we also want to take a look at C. That is not the letter C in the alphabet, but that is ticker SE, company SEA, a Singapore based internet company, reversing marginally higher here and hanging out in a buy zone.
Yeah, and this one does have a strong relative strength line that's been trending up for the past year. It's at a new high, or at least a new, like, 52-week or 2-year high. So that's been acting very well. It's a Southeast Asia e-commerce and other things. So, I mean, there could be dollar translations, which could make, tariffs and all the dollar moves could have an impact, but it's not directly impacted by the tariff. So, uh, you know, uh, I think that's something that investors might want to look at to some extent, is not have a portfolio that's too vulnerable to tariff swings. Uh,
Right.
y- there's so many things that with it. And so this one has strong. It's like got accelerating growth on revenue. It's turning profitable again. Look, the valuation is very high, but it has tremendous earnings, seen over the next year. So this is one that's done really well, and it looks like it's been, it looks like it's still in a leadership role.
Yeah. And of course, past performance is never a
No.
guarantee of future results. But, what we've been talking about here today, Ed, makes me think okay, if you want to know stocks that are resistant to volatility and some of the current macro headwinds or risks out there, I guess it would be look at how these stocks acted on December 18th. So the Fed side of things, look at how they acted on AI Day Monday last week and then today, the tariff side of the equation. And maybe, hey, that's somewhat of a tell for how volatile or exposed some of these stocks are to those different risk factors out there.
That's a really good thing. Yeah, you're right. And C has done well off of that, or did, especially given that it's a growth stock, it held up pretty well. But yeah, I think looking at those 2 days is a really good way to get a sense. Is this one got real support? Can it hold up, or is it just going to sell off? At the first sign of trouble?
Yeah, because we know the AI headlines aren't over,
No.
and we definitely know the tariff headlines and Fed interest rate headlines aren't over either.
There's so
So,
much going on there, but yeah.
yeah. Absolutely. And then one last thing here for see, at least from me, and that is to continue to focus on those early
Yeah.
entries. I did not take that opportunity here with SE, but I do really favor these entries, clearing trend lines, retaking of the 50-day line versus waiting for the breakout, especially when you do have these volatile markets where you can get those kinds of pullbacks.
I think that's a really good thing to do. I try to go for early entries as well. I've been looking at this one of the relative strength. It seems like a lot of early entries have happened because a lot of them and other things have pulled back, and there may be early entries that come out. But today I didn't wasn't seeing too many early entries.
Mhm.
But you want to be looking for them, especially as you say, chopping markets, because they might go up for a few days and then pull back. But this at least protects you from the pullback.
Yeah. All right. Well, before we wrap, we do want to check out at least one stock moving after hours on earnings, and that is Palantir. Full disclosure, I do own it, and it's paying off at least right now with the stock up more than 14% after hours, Ed. So a favorable reaction here.
Yeah, and I was just trying to look at the details. It looks like revenue growth really beat by a lot. Revenue growth accelerated again to 36%. Solid beat on EPS. I think they guided higher for the next quarter, so in the next year, at least on revenue. So really, really strong
Mm.
results here. I think it needed to have strong results because I think people are
Yeah.
really been. It's gone on a huge run, and people have a lot of expectations. Well, guess what? It met those and exceeded those. So as you say, it's just now somebody could something bad could happen on the conference call. That could always happen, but really strong initial reaction here.
Exactly. Yeah, we've got to get the headlines out of the conference call. Investors and analysts alike will digest the results, and we'll have to see how the action pans out tomorrow. But for now, a solid start. So we'll have to see what tomorrow brings.
All right. Well, congratulations.
Oh yeah. All right. Well, we'll see. Every once in a while, the earnings work out. Any final thoughts, Ed, as we
uh,
wrap?
no, I do not. Thank you very much.
All right. Well, thank you so much for joining me today, Ed. Always appreciate your insight. And thanks everyone so much for tuning in. That is it from us for today here. But it is the first Monday of a new month. So you know what that means. Monthly market report with Jim Ropel is here. So don't touch that digital dial. We'll be back on YouTube live at 5 p.m. Eastern with hedge fund manager Jim Ropel to go over his thoughts on this crazy market action for the month of January, how he's positioned now, and his top ideas for 2025. So we'll see you then, everyone.